Good morning to everybody. My name is Lee. I will be the moderator for this session this morning. Welcome to session one of 4 sessions presented by Mirfin Valuation Services. So what we're going to talk about today is how specifically the COVID-19 and the lockdown has influenced the financial position of a body corporate. So the first session we're going to have a look at is what's happened to the managing agent and how have their operations been impacted by this crisis. So the most obvious thing is that managing agents haven't been able to attend or organize trustee meetings or AGMs and SGMs. Cool, so I see Vicky is good with the sound. So managing agents, as we all know, they are responsible, or they get asked by the trustees to organize trustee meetings, to attend those meetings, and also to arrange AGMs and special general meetings. And that's probably one of the biggest things which managing agents haven't been able to do during this time. Also, building visits in your management agreement, for those of you who are managing agents, there's normally an undertaking that the property manager will visit the building on a regular basis. And obviously, specifically through the month of April, where nobody was allowed to go out, obviously this is something that fell away. But you need to consider some buildings having building managers or caretakers, some of them being living caretakers or building managers. Obviously, a body corporate or a building that has a person like that employed would not necessarily have the problem of ensuring that everything's running well at the building. So this comment really relates to those property managers who do not have building managers or facility management teams that are able to go to various buildings. Planned maintenance. We know that the only maintenance that was allowed was essential services or urgent maintenance. And things that come up with urgent maintenance is, for instance, if a geyser bursts. I'm not sure if any of you have experienced the situation with geysers or plumbers having to go out to buildings to replace geysers, but you would imagine that would be an essential or an urgent maintenance item to attend. Another thing which happens quite often with managing agents is that trustees or owners would just arrive at a property manager's office, and then the property manager would need to make themselves available to sit with that person and discuss whatever the issue is. So an interesting thing, obviously, Zoom has taken off tremendously during this time. Skype was obviously always there. So the question really is that what have people actually done to try and accommodate the situation where they aren't able to have meetings or face-to-face meetings with people? Has this been something that people have taken on and tried to run their day-to-day management of a scheme through Zoom and Skype? And we'd love to hear your comments on that, and maybe how it's impacted your business or your relationship with your trustees or owners, and if those people have actually been forthcoming and dealing with you on that basis. I think a lot of bodies corporate have seen arranging meetings through Zoom, a trustee meeting, or even AGMs, probably more cumbersome not to have those meetings and rather wait for the lockdown to close and then have a face-to-face AGM meeting. And you can imagine if you've got a big scheme of over 100, 150 owners or members, that a Zoom meeting could ultimately be quite chaotic. Please, if you could comment on that, we'd love to see what you guys have experienced during this time with regards to having meetings, Zoom meetings, etc. The second part is the financial impact on owners and schemes and how that's affected them. And we all know that a lot of people have unfortunately lost their jobs, they've been retrenched, and even where businesses have actually closed their doors, obviously not being able to employ people anymore. In a situation like that, people have had to consider what is the priority for them in terms of their monthly payments. And a lot of people would probably have thought, well, paying my monthly levies is not that important. I rather want to pay my my car or my car insurance or my household insurance. And that's ultimately given the body corporate a situation where they're sitting with people that suddenly run into arrears, which maybe they haven't had in the past. And the knock-on effect is obviously that the body corporates now are not in a position to collect sufficient levies to now pay for their services. And things that come up is security and utilities. And utilities specifically in terms of payment of electricity, water, refuse, and sewage. And I'm sure that myself living in Cape Town, the city of Cape Town have been forthcoming in allowing owners not to pay their rates and taxes or to request a relief over a period of time, but not for services like utilities, electricity, water, and refuse. So with the lesser collection of levies, bodies corporate potentially are sitting in a position where they financially they're not able to collect sufficient levies and to pay for their expenses. Some issues that I've seen on various platforms, on Facebook, sectional title platforms, is where bodies corporate chose to put their employees, specifically gardeners or cleaners that the body corporate personally employs, to put them on leave and to either reduce their salaries. And I've actually seen situations where bodies corporate have actually decided not to pay the cleaners for the time that they're not working. And I'd love to hear your thoughts on that, because to me personally, I think that was not necessarily the right decision to make. We all probably aware that cleaners and gardeners do not earn the biggest salaries out there, but certain bodies corporate have decided not to do that. And I'd love to see and find out what your thoughts on that. My personal thought was that even if you put somebody on leave for that period, that you would still need to pay that person. It's not their fault that obviously we went into this crisis. So obviously the other knock-on effect from not collecting levies or not getting income is that maintenance obviously cannot be done. But because of the restrictions implied by the lockdown, we all know that a lot of maintenance has been put on hold, and bodies corporate or trustees have decided to either delay doing certain maintenance, specifically when it's not urgent maintenance. Or urgent maintenance needs to get done, irrespective of what the situation is. But normal maintenance, if the building was supposed to get painted during the month of April or May, I'm sure that a body corporate would have decided to just move that on for a couple of months or 6 months or to the next financial year. Right, point three, the third session we're going to talk about is the insurance. And the reason why we've put this on here is because insurance, obviously, for a body corporate is quite an important part of the management of the scheme and ensuring that the body corporate is also compliant. A lot of people, and I've spoken to some insurance brokers out there, their experience was that a lot of individuals decided to cancel their normal insurance. People decided to cancel their car insurance or their household insurance. But the specific topic here is for a body corporate to cancel their insurance. And I certainly hope that there weren't any bodies corporate that did that. But the idea here is to look at, should a body corporate have decided not to pay the insurance cover, the implications of that. And in terms of the Sectional Title Schemes Management Act, the trustees are obviously responsible to ensure that a body corporate is sufficiently insured. And if they're not, if something goes wrong, if a body corporate is not sufficiently insured, that the trustees can actually be held personally liable for any potential losses due to damage or fire or any other issues that could have impacted the body corporate scheme. So again, I would love to see if there was any in your experience, maybe trustees or schemes that you manage, where it was actually even discussed or considered to not pay the insurance cover during this time. And obviously, the loss, any loss, has an impact on the entire scheme, because as a community, the insurance policy covers the entire scheme, not just an individual. Body corporate you could argue that the trustees argued that because they weren't collecting sufficient levies, that they also need to reduce their expenses. But again, the insurance cover for the building is something which probably should never even have being considered in a situation like this. So if you've had this experience, if you've had any discussions with trustees or even owners asking if the levies can be reduced because of taking out certain expenses like insurance, love to hear and see what your experience was. The fourth subject we're going to quickly have a look at is your 10-year maintenance plan, and how the current crisis or the last 3 months has potentially impact a body corporate scheme. We all know that each body corporate must have a 10-year maintenance plan, and that maintenance plan must be updated on an annual basis. So if a body corporate has a 10-year plan in place and they had certain planned maintenance that they wanted to perform during the months of April, May, and June, possibly even for July, what would they stand to do? So the obvious thing is that for the trustees to take their maintenance plan, to consider the expenses or the planned maintenance that they had for during this time, and to then adjust their maintenance plan to obviously allow for the lockdown and the disruption that it's brought to the management of a scheme. In my view, a 10-year plan should always be a living document. So even if a body corporate decides that a planned maintenance item should not be incurred during this year because it's not that important, the trustees should always have the opportunity to amend their 10-year maintenance plan, and then to report to the owners at the AGM what their decision was in not incurring that expense. So you can see that at the bottom, the trustees shift plan items during lockdown to future dates or financial years. So if it doesn't work for the body corporate to actually incur that expense due to the lockdown or the implications of the lockdown, then the trustees, because they are running the body corporate scheme and they're responsible for their 10-year plan, to merely move that expense to the next financial year. And in doing so, when preparing for the annual general meeting, to adjust that maintenance plan, to indicate that, and then to report that to the owners at the AGM. And I'm sure that's, because everybody is involved in this lockdown and the crisis, that owners would certainly understand the reasoning for moving the maintenance to a future date or financial year. And then point 5, which is the last item for discussion today, is the impact on valuers and how Mirfin specifically can assist managing agent and trustees. So one of the things that Mirfin does, or any valuer for that matter, is what they should be doing is, when they're doing a valuation, is to actually go to the building and do a physical inspection. Any valuer that gives a proper service should not be doing a desktop valuation. There are obviously complications and issues with just providing a desktop valuation. And the main thing is that there's no personal valuer's personal indemnity does not cover the valuation if it's a desktop valuation. So for the valuer to go to the building, have a copy of the sectional title plans, and walk the scheme to ensure that the structures that they see on site are actually indicated on these sectional title plans, is a crucial part of a valuer's responsibility and duty. What Mirfin has specifically done is, during this time, is that they offered managing agents to do a desktop valuation, but to then, once the lockdown was reduced, where valuers could actually go out and go on site and do a walkabout, is to then do their walkabout on site, check that the construction and the structures on site is actually what is on the sectional title plans, and then to amend the desktop valuation for any changes or for any changes or amendments to the original valuation. We're going to have a quick look at the chat and see if anybody there's some comments on here. So one of the questions that came through prior to the session is an owner who went and reported a tenant living in a scheme having visitors to her apartment, or his or her apartment, and the lady then called the security at the complex to address or confront the person for having visitors on site. And the question that the lady asked was that what are her rights in terms of addressing the situation with the security. And the short answer on that is that, you know, although everybody is involved in the situation, the scenario with the lockdown and the risk of a virus, is that unfortunately nobody can take the law into their own hands. The only thing that a body corporate can do is where the trustees are responsible for the running of the scheme, is for the trustees to ensure that everybody is aware of the restrictions, that they are aware of the requirements in terms of the lockdown and trying to prevent people from being affected by the virus. But in an event like this, where people during the lockdown period have invited people to their apartments, you know, have had parties or whatever, is to call the police. And only the police can then actually deal with that matter. If that would have happened or not, that's a different scenario. But in terms of the question that the lady asked, she unfortunately didn't have a right to actually confront the people, but surely to call the police and for the police to actually act in terms of what the people were doing, which was in contravention of the lockdown. Since some comments here, Zoom meetings definitely the way to go. Going to try and continue using Zoom even after lockdown, and I think that's a very valid point. You know, I think one of the things that's come out during this time is that people actually don't have to be sitting face to face to have a meeting. You know, obviously living in Gauteng, for instance, schemes are very far apart, and people need to sometimes travel, you know, an hour, 45 minutes, 30 minutes to actually get to a meeting. You know, using Zoom or Skype obviously now gives people the opportunity to have a meeting and not having to travel, which means that you can spend more time in the office, get more admin done, can actually deal with your normal day-to-day, but still have those crucial meetings during Zoom. The nice thing, obviously, with Zoom is that Zoom meetings can be recorded, so that can also be used for, you know, as transcripts for trustee meetings or AGMs. There was something about Zoom is not secure. Yeah, I don't wish to comment on that, but I think Zoom have actually upgraded their security settings, so that might have changed during time. I'm just having a look at another question from somebody. So somebody's asked, is it essential that a valuer have plans and walk the complex? What is the obligation if the valuer finds that a property has been extended beyond the plans? So the short answer on that is that is exactly why the valuer wants to have a sectional title plan when he's walking around. If there are 10 sections that are 100 square meters each, and one of the sections suddenly is 150 square meters or 120 square meters, and that's not indicated on the sectional title plans, the implication is that the valuer has to note that, and if when that valuation report is submitted to the insurance company who insures the scheme, the insurance company is obviously going to have quite a big issue with that, because it's an unregistered extension to a section, which means that the insurance company, unless the scheme is properly extended and the sectional title plans indicate the extension, the insurance company is not obligated to insure the scheme for that additional section. So you can understand that the implications on that on the trustees is enormous, because the trustees can be held personally responsible for the insurance of the scheme if it's not done properly, and then obviously the owner that's now illegally extended the scheme. So to answer that question, it is extremely important that the valuers walk around with the sectional title plans, because ultimately it has an impact on the insurance cover for the scheme. Just around the question of paying gardeners and employees for the scheme, there's a comment from Dyer saying that their body corporate decided to pay the gardener and the maintenance employee in full, and 100%, the body corporate would have budgeted for this already. So for the body corporate to pay the gardener, even if he wasn't on site, wouldn't have made any financial difference to the scheme, because the levies are based on the annual budget for the scheme anyway. So happy to see that people made that decision, Di. Another question that came through was obviously those people that were impacted by not having a job or being retrenched. Obviously there are those people that found themselves in a dire position where they actually weren't able to pay their levies. And personally, from my experience, I've experienced it where people have taken a chance, even though they were not in a position of not losing their job, to also say to the scheme, well, I can't go to work in April. In May, I've got to work from home and I'm not able to pay my levies. The scenario of the body corporate deciding on how to deal with this is actually not complicated, but obviously there's a process involved. The trustees are not in a position to make a decision on an ad hoc basis for an owner or the scheme as a whole not to pay the levies. What the trustees can do, however, is to address the members through a round-robin resolution, and in that resolution to call for either reduction levy or a levy holiday if they wanted to go that far, and hopefully they've got sufficient funds in the reserves. But the trustees are not in a position to make a decision for owners or certain owners not to pay the levies or pay a proportionate part of the levy unless they've had a resolution from all the owners in the scheme agreeing to that. The same principle of going to an AGM and getting your budget approved. It's got to be approved by the members, not by the trustees. The trustees prepare the budget, but they're not responsible on their own to make those decisions. So I know this was quite a hot topic at the time, and maybe if anybody has experienced that in their scheme, it'd be great to hear from you as well. Another comment from WPM Portfolio saying that that interest will accrue on the levy holiday if owners weren't able to pay their levies. I hope that the necessary resolution was obtained, WPM Portfolio, because obviously if that resolution wasn't obtained, then that can't be a valid decision. Mike Spencer, for those not paying levy, you need to ask for proof from their company. 100%, Mike, but still the bottom line is that the trustees can't make the decision just on that aspect. A resolution has to be passed by all the owners. Even if that resolution states that, certain parameters are met and certain people can prove that they can't pay their levies, that the rent relief or reduction applies to those people. But it is a member's decision. The trustees can't make that decision unilaterally on their own, and whatever the situation is. Some insurance, another insurance company. It seems like the insurance has been probably the most affected during this time, either dealing with claims or damages, and obviously contractors not being able to go out to apartments or schemes to actually deal with the maintenance. Yeah, I'm sure that there will be a lot of backlog on quite a lot of administrative issues. I can, however, punting Mirfin here. Mirfin is up and running. They're eager to assist whoever. So if anybody has any 10-year plans that they need to get updated or do, or you have any valuations that hasn't been done or needs to get done, please get a hold of Mirfin. The guys will immediately get you a quotation and act on your request. Mike asked if a valuer for commercial properties, factories, parks, does the valuer view the interior and comment on interior installations, i.e. call center? Mike, my understanding is that it's not the valuer's responsibility to necessarily comment on the fixtures and fittings internally, because and I must assume when you say for commercial properties, factories, warehouses, that you're talking about a sectional title commercial property. Again, the insurance policy for the body corporate is for the structure, not the interior. If it's a private commercial property, factory or warehouse, or private owner, I'm assuming that on that basis, the insurance company that insures that property might have some requirements for the policy, and in that case, you might find that the valuer must be requested or is requested to report on that. So in my mind, it just depends on if you're talking about a sectional title scheme or if it's a standalone property freehold, if they need to report on the interior. Shelley asked, do you automatically do an update to evaluation within the 3-year period? Or does the trustees need to ask for the update a year after the evaluation has been done? So Shelley, just to answer you from Mirfin's perspective, obviously in terms of the sectional title Schemes Management Act, evaluation must be done every 3 years. What Mirfin has introduced recently is if you've done evaluation through Mirfin in the past, Mirfin will automatically every year on the anniversary of the initial valuation, they will send you an updated replacement costs report to indicate what the replacement cost should be specifically at that time. And then what they will do is when you get to the 3 years later, Mirfin will send you a reminder and a quotation to redo your valuation for you. And obviously, if you accept that, then Mirfin will continue and do that valuation for you. So it's not necessarily something that's done automatically across the industry, but Mirfin certainly does do that every year, and that's free of charge. They'll just send you a report, tell you that your current insured value should be X, and that is very important for the body corporate or the trustees or the managing agent to utilize to actually make sure that the escalation in the insurance policy stays in touch with what the escalation, the building cost should be. Right, guys, we're running out of time. Again, I just want to thank you very much. Thank you to Mirfin. Like I mentioned earlier, this is session 1 of 4. Thank you for everything that you've shared with us. We'll certainly take that to heart. And all those that emailed us with specific questions, we will get back to you as soon as possible. So thanks very much, guys. From me, Lee. We'll chat soon.